Hey everyone, I want to talk about real quick verification of mortgage. And this is twofold. We want to do this for both a refinance and a purchase. If you already own a home, whether you're going to retain that home or you're going to sell that home or you're just going to simply refinance that house. Verification of mortgage, your current mortgage, is very important. Now, if you own multiple properties, this is going to apply to every property you own, whether there's a mortgage on it or not. Okay, so remember that. We still have to do a verification of the taxes and insurance on the other property, even if it's vacant land. Okay, so we have to do that. So let's just focus on the mortgage loan part of that. So we want to know what your principal interest is, your taxes, your homeowner's insurance, if you have flood insurance, if you have MI, mortgage insurance, or PMI, private mortgage insurance. Okay, that's usually people who've put down less than 20% on a conventional loan, or if you have an FHA loan, you'll have the MI. Okay, so we want to look at that, and we want to look at the last date you paid that mortgage. Your mortgage has to be current, preferably no lates in the last 12. Even better, no lates in the last 24 months. Now, a late payment is anything 30 days or more is a late. Okay, so when you get your payments always due on a mortgage on the first of the month, when you get to the 15th of the month, you get charged a late fee. Yes, you get a late fee for that month, but you're not late until you get 30 days late. Okay, so you're not late as far as credit rating goes. You're late as far as the lender's concerned, because they're losing money on that because you're still holding out on that principal and interest that's due. Okay, so remember, that's how the lender makes money on this interest part. That's how the lender makes their money. So when you're late for that payment, you're costing them money. So that's why the late fee. Okay, so we need to verify that. So when we're in through the loan process, and let's say you're closing on July 15th, okay, we need to make sure before closing that you also made your July 1st payment. Okay, so especially in a refinance, well, I'm refinancing a house, so a lender will often make sure you made that first of the month payment. So if you have your new statement, it'll reflect your latest payment. Okay, so sometimes if you made the payment on July 5th and you're closing like July 15th to July 20th, we really have no proof. So what the lender is going to do is the underwriter, the processor, or the loan originator will do what's called a credit supplement. Okay, a credit sup. We're gonna call the credit company that we use to pull your credit report, and we're gonna have them do that verification. They're gonna update a line. They're gonna verify with that lender that you're current and you're up to date. You have to be current, whether it's a refinance or purchase, on anything that you're doing. Okay, so I just wanted to explain that and why that happens. And this can be really tough if you're going to closing early in a month, maybe a July 8th closing, a July 7th closing. They still have to make sure, so we do a credit supplement. Most of the time, most borrowers don't even know that's happening, okay, that the lender's doing that credit supplement. I just want you to know, but we need that latest statement. So if you get pre-qualified in the month of May, we ask you for a mortgage statement. Then we're going to ask you for another one for June's payment to make sure, and you can say, I already gave you one. No, we need an updated one. I just want to explain why we're doing that. Now, verification of mortgage, we want to be cautious. If you have a private loan that you got from a private person, okay, so we might get into, they got to sign a verification of mortgage, and if it's really private, if they're not reporting to the credit bureaus or anybody, okay, they're gonna look for 12 months bank statements from you. So they're going to make sure that you make that always with a check, never pay cash, okay? You want to verify when that person cancels that check. And this is really important. This happened to me, not to me personally, but to one of my borrowers about 3 years ago. Even though they were giving checks, the person that had the private mortgage on the house, they'd give them a check. The person was just keeping them in an envelope and weren't cashing the checks. They would cash them like every other month. Okay, so in the month of January, they made January's payment, they made February's payment, then they made March's payment, then the person realized, hey, I got to cash these checks. So in the month of March, they deposited January, February, March's payment. So with that, what the lender looks at is, because it's when you cleared your bank account, the lender looked at it and said, whoa, wait a second. they missed January, February's payment. They were denied the loan. Okay, so it's real important. If you have someone you think is going to be delinquent, ask them for a copy of the deposit slip and go put your check directly into their bank. So you have a check every month depositing in their bank on private, okay? Really, really important. So watch these private mortgages. You know, some of these, you know, if you bought a house and it was owner financing, ask them for a copy of the deposit check, okay? A lot of the old folks, they're nervous about wiring in money. So ask them for a copy of the deposit and go deposit right in their bank directly yourself. That way you know your check is going to clear. You're going to create that 12-month history for yourself, and that's really going to help us with the verification of mortgage to make sure you're on time. But basically, that's what we're looking for in that.